ready to go. We got 2 minutes. 2 minutes. NFP's getting ready to come out. Basically, here's what we got. 2-week support held last night. I took a long entry at 2-week support on that candle right there. I got long on the retest of it, and then that candle smoked me. So that's the way it works in trading. You know what I'm saying? Here we are at the getting ready for the news. Literally 2 minutes until the news, and Bitcoin's trading at the high or around the high of day. You can clearly see that intraday you do have a bit of resistance here. If I go out in higher time frames, you can see yesterday or the day before yesterday, you put in a 4-hour resistance up there. So, I mean, you do have a little bit of resistance here. And as far as a long entry is concerned, I mean, it was here, right? Unfortunately, that wick right there probably got a lot of people. If anybody did indeed take that as a long entry, and that's just the way it works in trading, right? It's a little bit difficult to get a stop loss when this happens. I mean, it happens to everybody. It's not just you, so don't think it is. It happens to me too. But you can see the point of control. It does look like that more people are buying than selling. As far as the blue is concerned on this indicator, down here, it looks like there was more selling going on. That's just typically the way it works, right? You got people trying to buy the breakout, and you got people down here trying to sell the breakdown, but there is no trade. The only thing that I could say really maybe is if we get a spike down to this support right here, 830, there it is. Let's get the numbers. A spike down to support right there. Maybe take a long. Well, it's going back down. All right, so we can. If we get a retest of it, it's probably not likely. I still don't have the numbers. What the F? Why did this just do that? I had everything ready to go. So 339K. I want the unemployment numbers. See, it still doesn't even have it here. If somebody's got the numbers, that would be great. Non-farm is good. 339, that's, you know, that just gives the Fed more room to hike if they want, but we're already pretty damn sure that they're not going to. I could pull this up real quick, show you that this thing changed where just 2 days ago, there was a 68% chance that we were going to get a 25 basis point rate hike. You can see now that there's a 74% chance that there is not going to be a rate hike. How is that going to help Bitcoin? Obviously, I have no clue, right? Nobody ever knows what's going to happen with these markets. All I try to do is show you guys where the optimal areas are to look for entries, right? You want to look for entries at support and resistance. If you're trying to do an intraday trade, then you need to look for some form of support. And you can see that you don't have anything on the hourly, right? It's right there. I mean, you're literally trying to get long. We have something here in between on the 30-minute. Big spike there. Like I said, more buyers. So if price does indeed roll over, Denver is 5. Does anybody got the numbers? I hate doing this. I already had it all set up. All right, here we go. The non-farm payroll is 339, so that's bullish for the dollar. Participation rate, that doesn't really matter. Unemployment rate, 3.7%. Okay, so that's good because that's what the government or Fed is looking for is for the unemployment to start to tick up. They're looking for 4 to 1, anywhere between 4.1, 4.6 on the unemployment rate, as that would indeed cause them to stop. So I think that you should probably get a bullish pop off of this. But the problem is finding the area for the entry. And then setting your stop loss would have to be the low, right? So if you're taking it based on this, you got to wait for it to push down. If you're going to take it right where it is, then you're going to use that as your stop, the low of that candle. But like I said, once again, it's news. So yeah, we've been heading lower, and today's range is lower. Got a lower low. You can see, like, these are your daily ranges. You're making lower highs and lower lows, but you did find support here. You did get a nice bounce. I believe you would probably take out the high day before rolling over. So let's go ahead and just take a long shot right here and just see what happens with it. I'm going to mark the stop at the bottom of this wick. This wick right here. All right. 26947 on the Bitget platform. 26947. All right, so stop is in. Entry is high 27051. It's just pretty much 27K. It's a big figure number, right? Right there is 27K. Its price like literally almost went down and tagged it. Low is 26,976. So you're $30 off of it. So we'll see what happens here. It's a little bit risky taking a long at the top of the daily range, right? But the news is mixed. You got high non-farm payrolls, which is bullish for the dollar, right? 339, higher than expected readings should be taken as positive, aka bullish, but it doesn't always work that way, right? We know that. You have the news and then you have the market's reaction to the news. So it doesn't really matter what is supposed to happen upon these numbers. And then here is your unemployment number, 3.7. That's the real number that I was wanting to look at. And you can see that a higher than expected reading should be taken as negative. So you have a buy and you have a sell signal on the news with the news headline. All right. And like I said, as of right now, you have a 74.9% chance that the Fed is going to pause. Now, we had a Fed speak yesterday, a guy from the Fed. He's not the actual chairman, but he is a big guy in the Fed. He is a voting member. He basically said, what everybody already knows, that the interest rates are so high right now that they're afraid that commercial real estate is going to go bye-bye. So they're probably going to pause based on that fact alone, right? Because, if the commercial real estate falls, then that's going to tear up a lot of stuff. You're going to have a lot of banks going down. Then you could potentially call it a banking crisis. You got a couple guys on Twitter and YouTube saying now we're in a banking crisis. Let's be clear. Out of 4,500 small banks in the U.S. alone, 3 of them have went down. 3. That is like 0.0075%. So it's a very small number in the grand scheme of things. So it is not a crisis. And also, 2 of those banks were crypto banks. So 2 of those banks were crypto banks. One in particular was pretty much just shut down, right? I don't think it had anything to do with balance sheet, but that's just kind of being like, conspiracy theorist, which we don't want to be. We don't want to be conspiracy theorists. All right. So I got kind of a higher entry than I would have preferred, obviously. But we're going to see what's going to happen here. Something interesting is that the dollar did break down. The dollar did break down below. What am I doing? Here we go. The dollar did break down below its yearly opening range. So, yeah, that's what I want to see, right? We want to see a weaker dollar for Bitcoin to go up and for other assets to go up. Euro USD, I tried to get long at the euro at the yearly opening range. Once again, I was stopped out on this candle. So it's just The area is right, the timing is off. And that's one of the hardest things to do when you're trying to enter a position is the timing, right? That's what everybody always says. It's impossible to time the markets, which is kind of true, but these areas do help you at least know where you should be looking, right, for those entries. Now, what I could have done simply is waited for this right here, right? Gave it a couple hours, right? Let it get a nice spike to the downside and then buy it and set the stop under this support. That's your next support down under, right? Lowest bearish close intraday. So that would have been what, a 15 pip stop? Oh, 35 pip stop. Sorry. Big candles. It'd have been a wide stop. But still, I mean, clearly you'd be at close to 2-to-1 anyways, just based on that. However, I am not in it. So, let's see. The pound dollar is getting a pop based on dollar weakness. Let's see if the USD JPY, it's bullish today. It's up by 0.04%, so it's just barely up. Right here's the open. Forex market opens and closes at 5 p.m. Eastern Standard Time. That is 1700 hours my time. That's when you get to close in the open in the Forex market. You can see there you got a big spike to the upside and you're back down. We need Japanese yen strength. The Nikkei is doing good, so I think we could see tighter monetary policy coming out of the BOJ. If that happens, then the USD JPY should start to roll back over. And we are short from there, that very top tick. All right. Yeah, so this is the projection from Barclays where they think the Japanese yen versus the dollar will get to. 123, that's their number. That would be very good for my short, obviously, if that were to happen. Right? These things don't move in straight lines. It pretty much did move in a straight line down, but now you've got this move that looks bullish. It looks like you're bullish, right? You're above the yearly opening range by a nice chunk. You broke back above, you tested it, and off you went. And you're above the weekly 21 exponential, which are two things that I use to basically identify trend. So obviously, just on the yearly basis alone, you're in an uptrend. If you look at everything, right, because the moving average does take into account price action from the past, you're in an uptrend. So taking a short on an asset that's up, not usually advised. However, we thought that the marketplace was about to do a massive turn, right? That's what we try to do. We try to nail the massive turns, and we've been pretty successful at that. All right. So Bitcoin still got a couple of days left on that 2-week close, 2 days, 12 hours to be exact. If this holds, that looks kind of good. But once again, we really need to get above and close above this bullish candle up here. But I would even consider, if we could get above this weekly close, just this candle, this open, then you would have what would be considered a breakout if you were using trend lines, right? If you put a trend line on there, you're a breakout. If you use the line chart on the weekly, you've already broken out, right? You've already broken out of a descending wedge or a bull flag pattern, and this could be considered a retest. Take it off log, on log, off log, on log. So it's not as close as it was yesterday. Let me get rid of weekly demand, as it is not as important as weekly support was. 2-week support. But we were almost there. We know that we did test it. We got below it. Remember, I got long at 2-week support at that price. And then the 8 o'clock open stopped me out of the Asian session. And then up she went, right? Typical. So I am in the long position now for the day trade. Up pretty good here. Looking at about 10, 11%. Let's see what happens. I want to see if we can get above yesterday's or at least make a fresh daily high. This would be a fresh daily high above 27,276. Currently, we're trading at 227,194. Yeah, it would be nice. Basically, the reason I want to see it is because we've already tested the 2-week support and we got a bounce. That bounce was immediately faded yesterday. Once we got a little bit of bad news cooking on Twitter, MEXC and everything else, I think caused a little spike down. So I want this bounce to be higher. So in order for it to be higher, it kind of needs to take out yesterday's high. Even though yesterday's high was put in before the test of 2-week support, I would just feel a little bit better if we made a higher high. A bullish engulfing would be nice at support. But like I said, people are going to be lined up here to sell. You got 4-hour resistance. You got 1 hour. You got a 1-hour supply zone right there. That's kind of keeping, price in check for now. But you got some time, right? It's only 8:45. The stock market's not going to open till 9:30. So what's that? 45 minutes away. And we got 14 minutes left on this close. That can go a long way in telling us, a little bit about something. A higher close would be nice. Above resistance. But, like I said, you don't typically want to be getting long around the high of the day. You want to wait for those support tests. Okay, so we do have a daily support now, and it is going to be higher than 2-week support. If it fails here, it's going to look bearish to me near term. I want that on. I want this off as we're back on the daily time frame. You can see how that daily is. Yeah, it looks good. It looks, you got a nice bounce, but just testing this thing right here and falling isn't really what we want to see. We want to see this trade up to here and close. A close above yesterday's high would be good. That would be a bullish engulfing, and that would pretty much make this a bear trap. But as long as you're trading under yesterday's open, then sellers are going to be enticed. It is a decent sell side position. The last 3-4 days have been bearish, right? And being up this far, that gives you a reasonable expectation. So if you were looking for shorts, you would be looking for shorts roughly around 27,221, and you would have a potential downside to 26,828, which is daily support right here. So from yesterday's range, that's where you would be looking to operate. So what you would want to see, you would want to take an entry there, use today's high or yesterday's high. Yesterday's high, that's 2 days ago. Wait a minute. Yeah, yesterday's high is still a pretty good piece away. But like I said, you're still early. Anything that happens from now until 9:30 could be faded. But if you're looking for a short, that's the range you're looking to operate in. 27,221 down to 26,828. And that stays within the daily range. No, I'm good, baby. Thank you. It's Amazon that all these years this channel's calls were the best and on point, and only 22 watching now. Yeah, it's all right. I mean, a lot of people got burned. You know what I mean? In FTX, it's a bear market. I have a scruffy voice. Like, you can make 1,000 reasons why people don't like to watch the channel, but it's all good, right? It's the people that do watch it. That's who I do it for. So prices coming back down close to my entry. I probably won't eat a full stop if it continues to go lower with just 11 minutes in on the candle. I don't want to see it to, get under this area, or of course this area, which I must be looking at the wrong time frame over there. Oh, I am looking at the 4 hour. Yeah, so my entry is higher than I wanted it to be. But I have seen hourly candles look crappy until the last 2 minutes, and then boom, right? Where you just get this big massive 5 minute spike. Huh. Uh I'm I love Friday streams because I'm not fixing teeth. Mr. Dentist in the house. I guess you got a 4-day week. That's not bad. 3-day weekends are good. 3-day weekends are good. So yeah, we're just gonna have to wait and see here. The CAD Swish trade, there it is. Entry at support. Just to show you guys, that's just how I do it, right? I take entries at support. This is support. Intraday, you got under it, obviously, but when you're looking at the higher time frame supports, you got to look at them with definitely a chance to bounce. You bounced there or made, I don't know, by the way it looks like, yeah, there it go, right there. So you can see I took the entry. Right here is the entry. That's daily support. I took the trade based on this, right? The daily was trending above the daily 21. Remember, for day trades, as long as price is above the 50 on the RSI and above the 21 exponential, I look for bullish entries. When I took the long off of daily support, you can see on this candle, you broke down. You broke down below support, which was here, right? There's your move up. This would have been support. Actually, I think it did hold support there as well. It's always the lowest bearish candle in the what you're looking at. So come down, you set support, then you get a nice bullish bounce reaction off of the 21, and then this, boom. So anybody that got long on this day was expecting the daily 21 to hold as support, right? And that would have been a decent trade. And if you would have taken profits on that day, you would have made money. But then 2 days later, here we go. So on this breakdown, not only did you break down below support, you also broke down below the 21 exponential moving average. So you would expect me to be looking to short any retest of support, right? No, because I know traps exist, and they exist on every single time frame when you're looking at, 4 hours, 8 hours, dailies, weeklies, monthlies. Traps exist. This is a daily chart. In order for your trap to be a trap, you got to see bullish price action afterwards. One day is good enough, right? If this day would have closed bearish, I would have exited the position. But since it closed bullish, I just let it ride. And letting it ride was the right thing to do. So I was trading this as a trap, and my entry was based on support. All right. So going back into intraday, let's get rid of this. Going back intraday, you can see that white line is that daily support, and you can see that I took the entry in this area here, right? And you know what time? This day you would have been wrong if you took the short at the London session open, because remember I said a lot of times the London session will call the high of day or the low of day. In this case, it pretty much called the low of day. So you wait till this candle closes, boom, get long, low of day, London session. You could have taken the short at 2 o'clock, you would have made money. Could have taken the long at that wick, you'd have made money. London session is a freaking damn good session to look for entries. Unfortunately, I don't like to wake up that early. So basically what I was taking the trade on is just this right here, right? This section here. So I was hoping that this area held as support. So when this candle comes back in, 9 o'clock, 10 a.m., boom, comes back in, retests. That's where I took my entry. Use the low of this as the stop. And as you can see, it's a nice entry, nice position, right? However, it is coming close to, no. It is coming close to the end of the road. There's a 2-week resistance. That looks really good for a breakout potential. But I mean, man, you're bearish, right? You're bearish. This is the monthly. There's your yearly open, up, set the high of the year. Then you broke down. So this on the long term, like in the quarterly or monthly, this could end up being a shortable opportunity as long as it finds resistance. As long as it finds resistance. Now, when you're looking at monthlies, one day could break through and then the next day could break down, but who knows, right? We'll assess if we even get there. It could find resistance at last month's or not last month's, but this bearish month open. It could find resistance there. It's this month just open too, by the way. So the fact that it is moving higher, not really great, because usually the first part of the month is the fake out move. So like on this month here, you can see the wick up and then it fell, right? So this month could be the same thing, a wick up and then ultimately it could fall. And it would be in line with the trend. Coming into an area of weekly res right here. So how would you take profits? Well, 2/3 of the position. I got, 2 lots on. 2/3 of that be what? A quarter of it would be that 50,000 units. So we would want to sell like 150,000 units. And you can do that by placing a limit sell 067573. So you want to sell 150,000 units. Well, I just did it, right? You can see how it took it off. It did it at market. If you wanted to do it at limit, you could put it up here and did a limit order and put in the price. But just do it at market. It's fine too, because it's going to give you the price close to the bid and the ask minus the spread. Spread is 3.6. So go ahead and take the profits on that. That leaves, a nice little chunk of change still on the trade. And the money's in the bank. And if the price wants to roll back over and become bearish, I'll get stopped out and all will be well, as the trade itself was profitable. And like I said, that was taken for a day trade. So in a typical scenario, I would have taken profits on that day, right? As price traded up around into this old support area, I would have taken profits. But my stop was so wide that it wouldn't have been a 2-to-1 risk to reward. So it really wasn't, as far as in terms of risk to reward goes, it really wasn't the best trade idea. Right? It just worked out. So, and that was a nice return on that, because I was risking like $400, something like that. $382, I think. I can't remember. I'll have to hit the rewind button and see, but nice trade. And then the Japanese USD Japanese yen trade is still on as well. What did I do? Right. I'd like to know how that happened. Right there. The stop loss is at break even. That's why you can't see the stop loss. But there was the entry on that. Still holding that. I already took profits. I entered this position on a 3-lot. 3 lots. So I got short at 3 lots. I took profits on the move down. It was a day trade only. And it was a good one, because like literally within 5 minutes, this thing had dropped so far, so quick. So as it started to roll down, I took profits when I stopped to break even. And as you can see, 2/3 of the position setting at roughly $8,000 on the day of the day trade. I took 10 grand off in profits on this day. So I took 10K worth of profits off. I took profits twice on this day because it was such a big day. But in total, it was roughly around 10 grand with 3 lots. This is a 570 pip candle. So you could do the math, right? 570 pips. So I took about 10 grand off, moved the stop to break even, and I've been letting 2/3 of the position ride, just riding out, right? It doesn't matter to me if, $8,000 is a lot of money to lose in unrealized P&L. I understand that, but I'm giving it room to work. I'm giving it room. Although it looks bullish and my short may be doomed, I've already paid myself for this entry. So I don't have to really worry about it. This is just unrealized P&L. It means nothing. So if we get back down to where, Barclays got their estimate at 123, then that would probably be another 14-ish to take off of that position. So literally one trade made, about roughly what a normal American gets paid in a year. So sometimes you can make fantastic day trade entries and they end up being positional trades where you're holding it. So on Bitcoin, we closed bearish on that candle. Not really cool. Don't like it, right? We're still early. Like I said, anything that occurs right now could potentially be faded. By faded, I mean go the opposite direction. So if we end up going down based on the news at 9:30, as long as support is being held, you could see it shoot up. Today's high is right there. It was made at 1 o'clock in the morning. So yesterday, your open was the candle that stopped out my long entry at 2-week support. And I was using this low as the stop. Boom, stopped me straight up. So I was 1 hour off. You could have taken it upon this candle closure, right? I mean, as you retested it again and you closed bullish, you could have just taken the entry there, put your stop down there. Still would have been a 2-to-1 position. But I was pissed off that I got stopped, and my emotions just told me, screw it, right? I was like, screw it. I got stopped out. Now I'm pissed. So I didn't bother to try to take a second entry. Because that's a lot of times what makes traders lose money too, right? If you get stopped out, man, you're wrong, regardless if price goes your way right after or not. Because a lot of times what'll happen is that's called revenge trading. You think it's going to turn just because it's an important level, but price just keeps breaking down lower and lower. And you keep getting long thinking that this is the long, this is the long, this is the long. And it just keeps going lower and lower and lower. By the time it's all said and done, you've massively drained your liquidity. And it's really to do on crypto exchanges because they're high in fees. The strategy works across because for U.S. citizens, it's almost important to trade crypto anymore. There's like really no legit or legal brokerages that the U.S. citizens can use. So the only thing you can do is buy on Coinbase or sell. You can't trade futures products. So if you want to, you can do this in Forex. Right? I just showed you two Forex examples where I'm using the exact same strategy. I'm letting price show me where the support and resistances are. $27,106. We got a new hourly. Got 25 minutes until the New York Open. So far, the position has not been stopped out, but it's not looking so hot. Good morning, Mr. Tom. Up 127.5 pips on that cat swish trade. Cheers. Cheers yourself. You did it, not me. I'm not responsible for anything that you do, right? Any money you make or any money you lose, it's not me. It's you. You did it. All I'm doing is showing you areas, higher probable areas to look for your trade entries. That's it. Higher probable areas and times. It's up to you to manage your risk and all that good stuff. How much money you put on exchange, all that. That's all on you. I don't recommend leaving an amount of money on any exchange unless, like for instance, Thinkorswim. That's a regulated exchange, so you can leave money on that. I'm thinking Interactive Brokers is a trading platform. I'm thinking about opening an account there because they give you 4.5% year over year interest on just holding your money on exchange. So it's like a bank, essentially. Interactive Brokers. I just seen a commercial for it yesterday. So they actually pay you, even if you trade or not, just putting your money over there, they give you 4.5%. Obviously, that won't stay like that forever. But once you sign up and do it, it'll, should be good for as long as they do it. But I am actually thinking about it. And I think Interactive Brokers is actually, let me see. Let's see, brokerages. Right there, Interactive Brokers. So it's connectable to this. So you'd be able to place positions directly on TradingView with Interactive Brokers. I'm sure they have their own platform. Of course they do, like every other exchange broker. But you have Interactive Brokers. They're linked to TradingView. Nice. So it's just like Oanda. You can take trades based straight off of TradingView. Now it is third party risk involved doing that, but you're giving TradingView access to your account. that's how it works. But I've never had any problems, and I have Forex.com and Oanda linked to TradingView, so never had any problems yet. But who's to say, right? That's who's to say. Banking collapse would affect a lot of things, including brokerages. Interactive brokers, you're not in America, are you, Tom? So the order ticket window is like Oanda, or just like, oh, Canada, but they're a big US broker. Gotcha. Nice. Yep. So I'm thinking about it. Thinking about putting some funds over there, trading around with the stocks. Does their platform have options? I mean, I know there's no options on TradingView, but like on Thinkorswim, does the interactive brokers or interactive brokers platform, do they allow option trading? Kind of still just waiting here to see what Bitcoin's gonna do. Is it gonna rip or is it gonna rally? Options and FX. Nice. And Ray says, just like Fidelity, currently 4.74%. Interactive Brokers is a really good one. Yeah, that's cool. I know on Thinkorswim, they give you like 0.010% interest for holding your funds on the platform. So that's a really good selling tool because everybody's going to T-bills right now for the guaranteed percentage year over year. They're looking for the small returns because the markets are so hard and difficult to trade right now for most people. Not for us, but most people. You can trade CME futures too. Nice. Yeah, I probably sold on that. I'll probably open an account today. Throw a little bit of cash in there and see what we can do. Thinkorswim platform is pretty good. I mean, I have no trouble with Thinkorswim. I have no problems with it. But right now, Interactive Broker is offering that. That's that's a good sales pitch. It's a good way to get people to put money on your account. So I mean, it's trading right there. It's trying to break through. Oh, here was the news. 8:30, and a nice move up, and then you're kind of sideways. High of day still up there, so yeah. You got another hourly support just under it, so like sometimes I would even potentially take a short if you did break down below support with a close as long as I got a retest of it. But you got another one right there. So in that scenario, it'd be a little bit different because then your profit target range is going to be a lot smaller. You can trade CME Bitcoin futures. But you're that's settled in cash, right? I mean, you're trading Bitcoin, but it's settled in USD. I mean, I really don't see the point. I guess you could use Bitcoin um for the sheer volatility that Bitcoin provides. When it does provide volatility, it hasn't been lately, but a 5 or a 6% move in Bitcoin isn't unheard of, especially when it's in a trending environment. Whereas a 1% or 2% day on the S&P is like a good day. How many times have we seen the S&P 500 close, at like 0.4%? Like right now, it's at 0.49%, 0.27%. Now, this is the E-minis. This follows the E-minis future contracts. So the actual SPX, when it opens, depending on where it opens, will determine what percentage it is on the day. It's currently closed. That's yesterday's close. So where's it at? 42.21. We're at 42.45. So you're going to gap up as long as it holds that price here in 15 minutes up to around there. So you'll probably see a little bit of selling off the open just to fill the gap and then up. And yeah, I use it differently. Like someone asked me on Twitter the other day, why do I look at gaps differently than other traders on Twitter and YouTube? It's because, in my opinion, the high of day is good enough. Like it doesn't have to come all the way back where it closed, all right, to fill the gap. You just have to come back to there because price traded there intraday. So to fill the gap, you would just need to tag that high. The high is 42.32.43. So a tag of 42.40, whatever, 43. In my opinion, that would be gap fill. They asked me on the CME futures on Bitcoin. There is literally no freaking volume or liquidity in that. No liquidity. Like, it's insane how much the volume has gone down. But it was this gap right here. All right. We opened all the way up there. So when we tagged that high, I said gap filled. But it did ultimately go where? To the close. But I mean, you can do it like that if you want, but you're going to find a lot of times it doesn't do that. It'll just tag the high. And sometimes it won't even tag the high. You got a gap of $115 down at $9,000, 9.7, like 9.7. I can't remember exactly the price, but right here, you got a small gap right there that was not filled. Boom. Now, price traded in this gap over here. See all this? All right. So there was trades that took place there. That's why when it ran away, I was like, you can pretty much consider it gap filled. It never did tag the open or the close of the very next day, which was there. So, I mean, that one's unfilled. If gaps have to fill, which we know they don't, because on the stock market, there's plenty of stocks that have gaps at lower prices that you're never going to see filled again. Like on the SPY, for instance, there's probably 1 million of them that's never been filled and never will be filled. Because if they did get filled, holy cow, you're talking about decimation. Like that one over here. That is a gap. Oh, come on. Gap at between 152, 154, so roughly 153. Not filled. Do you think price is ever going to come back down there and fill that? I don't. And if it does, like I said, you got a massive catastrophe on your hands. Massive. At pre-market, just to fill the gap, you're looking at a 64% decline in the S&P. That would be just ungodly. Here's the '08 crash. 57%. So you would be worse than the '08 crash. There's a gap right there, too. See? We know that one's never going to get filled. I'm just saying, gas don't have to fill. But they have typically so far on the CME, all of them except for that $9,000 one has been filled. So back to Bitcoin intraday, the trade is still holding up. Haven't gotten stopped yet. We got 9 minutes, 46 seconds until the open. See how it works. I was looking at a couple other things. Let's just pull this up over here and we'll keep it on. Intraday retest of the yearly opening range on the DXY. Man, I'd love to see this thing just crumble. Just crumble. Because I strongly believe that the Fed is coming to the end. Like, if you didn't watch yesterday's live stream, go watch it. I discussed it like the first 20 minutes of the video. Why I think the dollar's going to roll over. I think it's based on the fact that the euro is still high in inflation, so they still have room to hike interest rates. Why does that lawnmower sound like it is in my house? And if the U.S. is coming to the end of their rate hiking cycle, then we could see some hikes and the euro gain some strength, and just from euro strength could cause dollar weakness. And like I said earlier about the Nikkei, it's nice. It's been doing good for several weeks. So the BOJ has room now that they could actually start hiking rates. There's your Nikkei. It's not all-time highs, but it's a long time. There's your all-time highs. So, I mean, it's doing good. Several weeks in a row, you've been bullish. You're breaking out. Nice short squeeze going on. So if they wanted to, if the BOJ wanted to tighten policy, they could. That would also cause weakness on the dollar. And that would absolutely help strengthen the yen, would absolutely help that. USD JPY short. So here Bitcoin is dropping. I wanted the dollar back up there. See what this thing's gonna do here. S&P 500, they got a nice little pop to the upside, but on the open it could get faded, so we'll see how it works. ETH looks great. ETH looks good. As long as it can close 2 days up like this, that's gonna look good. You got another 2-week resistance up there, but this would be considered a breakout. Ugh. That monthly looks bad. Doji. What's it currently doing intraday? It's going lower, but it made a fresh daily high. So once again, Ethereum putting in a beautiful trading opportunity. That would have been a short. Yeah, for sure. Should have been watching that one. Should have taken that entry. Because just on that wick right there would have been a profit-taking moment. Wait a minute. No, it wouldn't have, because that happened on the news. My bad. I don't know. That still would have been pretty decent with leverage. Always be careful when using leverage. Let's go. Collapse. Break down. Drop. So there's the open of the day. They're bearish on the day. Ooh, the London session would have gave you a short opportunity, but then you would have got stopped out. But I like that. Get down there. Yeah, I agree. Let's go. Get down. If Bitcoin can make a fresh daily high, I will take profits. On the Coinbase exchange, this is your daily high, the 1:30 a.m. candle. On the Bitget platform, you already took that out. So I should have taken profits on that move up when I said it looked good. When it pushed up there, I should have took profits on that. Because like I said, on Bitget, it went much higher. Well, higher than the previous high of day. I mean, come on. Look at that. Just look at that. That close is right there. Why else would that? Like, if you didn't know what I've taught you, why would you have thought it closed there? You'd had no idea. You've been lost in the dark. I mean, that's an hourly, and it closed perfect. 103,663 is the yearly open, and the close of this candle is 103,664. Literally a tenth of a penny off. And that, my friends, would have been the short entry. There's the breakdown. There's the retest. Will it hold or not? We'll see. I mean, being under the yearly opening range, to some investors, that will look cheap. Wouldn't look cheap to me because it's already put all this in. But it is a pullback nonetheless. And you're still above the 21, so we just need today to be bearish for the intraday trade on Bitcoin to be successful. S&P pushing up. ETH not really doing anything. Let's go look at the NASDAQ. Oh, that's not the NASDAQ. NASDAQ looking weird. But it's overbought, right? The NASDAQ is overbought. Pretty massively overbought on the daily, and then overbought, not massively overbought, but overbought nonetheless on the weekly. So I'm kind of expecting this thing to pull back soon. Not for a breakdown, but just a pullback. But if it's in a short squeeze, I mean, it can keep going. This is really just from like 5 stocks. Yesterday was a good day for the broader markets. It's 9:30 now, so I'm too late. I was going to show you how everything was green yesterday. Every sector almost, except for 2. Every sector was green. I should get rid of the SPY, the DAA, that and that. Because this is a bank ETF, not really a sector, because finance is the sector right there. This is just a banking ETF. And then this is a semiconductor, and that's a semiconductor. iShares semiconductor, Van Eck semiconductors. But all your sectors are up. That would be good overall for the markets, right? It would be good overall. Instead of just 5 to 10 stocks holding and propping the market up, we have all the sectors now coming in line, helping to push the marketplace up higher. Everybody that was looking for a bearish bounce or whatever, they were wrong. They are wrong, wrong, wrong. Or they have been wrong, let's say that. Beautiful. Got it. Year to date. Up 10.59%. So year to date, you're up almost, like the S&P 500 generally year over year, they look for 8 to 12% gains year over year. But just year to date, you're up 10%. Right? Year to date. Retest. Buy it, baby. This one really didn't give you a clear opportunity, I don't think. Yeah, it did. It did right there. Boom. Beautiful. Perfect. Buy it. Too late now. Now people are starting to talk about it. But we've been talking about it for a long time. This thing is squeezing. Squeezing, baby. Squeezing. Bitcoin's starting to get a pump here. Like I said, I'm going to take profits upon a fresh high day if it gets up there. Be like roughly a 1-to-1. But since I bought it at the daily high, I have to be more risk averse, if you will, right? Because it's not a high probable trade to buy the high of day or buy up in the high of day range. Because you've been in this range since what? Midnight? Midnight, you've been just in this range. And we bought it here. My stop is currently under that wick. So up there, 1-to-1, I'll take profits, move my stop to break even. What was I wanting to show you? Yeah, let's go do it. 5-minute. Nice push. Nvidia. Everybody's talking about Nvidia. The AI trade. You can trade AI just by trading the ticker AI. It had a nice pullback. But you're still up on the year. Right? You're already up on the year pretty good. But if you think AI is going to be a thing in the future, instead of picking one company, this is something to keep on the watch list. All right? It's something to keep on the watch list. It's actually a company, but I can't remember exactly how high it is on the year. 200% would have been a nice trade. But it's pulling back, so wait for it to find support. You don't want to buy it right now. You'd be kind of trying to buy a breakout, which this is an actual retest of old resistance. So there really ain't a support in there. Or isn't. Maybe 28.53. But I mean, that's a big pullback. People are going to be buying that because the AI play is new, right? ChatBT just came out 2 months ago. So if AI is going to revolutionize the world, it's going to be another internet or another cryptocurrency or whatever, then buying it on the ground floor is definitely the place to do it. But that opportunity has passed, obviously. There is the yearly open. So $11. That's where you would want to be a buyer or been a buyer. This was a nice pullback. So yeah, all these things moving up on the open, I don't really like that. Don't really like that. Big push up there. We'll see. AI is so hot, I wouldn't doubt it if it does find support there. What's the best time of day to trade Forex? 6 a.m. Eastern is a good time. Yeah, I look for trades from 6 to 10. 6 to 10. Now, obviously, like sometimes with Forex, it's difficult because, like, how can I explain this? You can find moves from 6 o'clock to 8 o'clock and make profitable trades. But it seems like here lately you've been getting like your real moves at the New York stock market open, right? Because more volume is coming in. But 8 o'clock a.m. is when the Forex New York session starts, is 8 a.m. That's what time the New York session kicks off. So you got like 2 to 3 a.m. is the London session, and then 8 to 10 is like the New York session. So, I mean, yeah. But you can see here, like from 4:30 in the morning, you got a nice push for an hour up. Made a fresh high day, and then you've been rolling over. So here you are. Aussie has been really weak lately. It might find support. We'll see. Yeah. So like, yeah, I'd say 6 to 10 is a good window. After that, it's done. It's over. I wouldn't be looking to trade after 10 o'clock. Used to, like a long time ago, I'd be done by 9 in most cases. I would look for a trade. If I didn't find one, I just don't trade that day because there's not always a trade to take. I mean, there's opportunities every day inside of the marketplace, but there's not always a trade to take because you know, you're looking for specific things. You're looking for specific areas to look for entries. You don't want to be trading in the middle of any range, whether it's a weekly range or a daily range. Like you can trade in the middle of a weekly range if you're at like daily resistance or something like that, right? But those are the ranges you're looking to operate in. You're not looking for expansion. If expansion happens, then that's icing on the cake. But to be a market operator, you want to be looking to operate inside of the range the market has already given you. That's where the higher probable moves are. So like getting long, and then if you get into a short squeeze, then yeah, you know, you make sure you take profits on the initial move, leave a small piece on for potential continuation. We don't ever trade looking for continuation. Unless it's an investment. If you're investing, that's different. You're going to buy it at a price that you like and you're just going to hold it forever, right? That's different. But for a day trade, you're looking to trade inside of the range that you've already been given. Because a lot of times it's choppy. Very, you know, if you get in a trending condition like you have been in the NASDAQ, then you'd be looking for pullback entries into support, right? You don't look for entries anywhere else. This is old resistance, but ultimately that would have been support. So notice how you're at the top of the range, you know, kind of breaking out here. Daily support. Let's go intraday and look how that played out. Right? 1 o'clock, 2 o'clock, 16 to 18. So right there was the close for 2 hours. Closed at 4 o'clock, opened back up. Oh, wait, am I right? 1600 hours. That's 4 o'clock. Yeah, 17 is 5 o'clock. So you closed at 4 o'clock. You open back up 6 o'clock at support. But that's PM. We don't look for trades until the New York session. So here's the London session. Set the high of day. Then it traded down. And then next hour, you had a low push down. So where would you have been looking for bullish entries if you were bullish, knowing that this is daily support? Here, this hourly close back above, right there. This candle opens, you buy a retest of support. Right there. Boom. That's daily support. That's the price you're interested in buying. That's the only price you're interested in buying. If you're under it, you're not looking to buy it, right? Because you can get downside continuation. Getting back above it when you're in an uptrend already, boom, buy daily support. Stop low of day. And 1 hour later, you're taking profits. And then you got another pullback that took, all the way up until 1 o'clock in the day and then rip. But just by taking that entry, take profits, maybe stop to break even, you ended up catching a breakout continuation. But we don't ever take a trade expecting that. We're only looking to trade inside of that daily range. But, you can take it at intraday support if it's under the daily support, if you think it's going to be a trap. But if you get stopped out, you're done. You just want to eat one stop. You don't want to eat more than one stop per day. And you don't want to eat more than 3 stops in a week. So if you're eating 3 stops per day, you're doing it wrong, right? Your whole goal is to make a couple percent at the end of the week. That's it. Yes, 2 to 5%. If you can do that every single week consistently, 2 to 5%, you're going to be destroying everybody else. You're going to be in the top 1% of best traders. Like sometimes I get on YouTube and I force an entry, like for instance, today, I would have never taken this trade. I only took it based on the news and I should have exited here, right? But I didn't. And now I'm probably going to suffer the consequences. Sellers are up here because it's resistance. You're a buyer at support. You're a seller at resistance. So I'll explain this a little bit further. So I just got stopped. All right. So forget all of this stuff. We know that this is 2-week resistance. This is the daily open, right? That's a nasty daily open. Big wick to the downside and then up. So if you were bullish, what you would have been looking for would have been a retest of the daily open or of this price here. Because that's support. That's your first support inside of the daily range. Right? We're trying to anticipate what the market's going to do given the range that we have in front of us. So at this point in time, you've only got 2 candles. So a lot of people would be selling this because of this wick. That's the daily range. And they got stopped out. That's why you got to rip. Boom. So we needed another support in the middle of the daily range. We didn't have one. It's either here or up here. Here or up here. Those are the only 2 places you could be a buyer inside the daily range. And to be a buyer here, means you're buying into resistance, like literally. That was resistance until this candle broke it, so that candle became resistance. So now this is the range you're looking to operate in, right? Long, sell. So me not taking profits, well, that's my fault. That would have been the only opportunity from here to here, because that's your support, that's your resistance. You don't have anything in through here. Now, if you go into the smaller time frames, you're going to have bearish candles. You got one here, you got one there, and you can get long based on those closes. And if you'd have bought that price, I don't know where you're going to put your stop, but if you bought that price, which is the close of that candle, naturally, you got an expansion. Same for this price. Up. You see what I'm saying? You're only a buyer at support, ever. You're always a seller at resistance, because that's where the sellers are. So here, people sold it instead of buying it. Whereas we were trying to buy it because we were looking for a breakout or a fresh daily high. We didn't get it. On Bitget, it did happen, but I was busy running my flap, so I didn't see it or catch it in time. But that's where you would have been looking to take your profits. Why? Because that's the daily high. You're not looking for continuation. You're going to look for the market to potentially take that out and then rotate back into the range and find support. If it's going to find support, if it's going to be a down day, then you're going to be looking to sell resistance. Where's resistance? There's resistance. There's resistance. So you'd be a seller at 27,083. Or a potential seller if we get a test up there. I don't think I would, given if you close a 15-minute candle above that, then you have a new resistance, right? Then you can't take the short. But I wouldn't go any lower than 15 minutes. 5 minutes, you just get too many candles, right? And it just doesn't work like that. Sometimes it does, like in a lot of my earlier videos I made where I took like an entry based off of a 5-minute supply zone. But that was at like a daily resistance or something. Like daily resistance would have been here per se, right? Through here for pretend, right? Oh, H. Let's just say that this was daily resistance, just random price. Then I would have taken a short upon this retest of that 5-minute heath level or supply zone. Stop above the high. Take profits on this move lower. Boom, right? And it's inside the range. This is what time? 12:45 p.m. So at that point, so this would have been your daily high. This would have been a lower high inside of the day's range. This is your open here. Daily open, up, and then down, and then sideways, and then the London session, really nothing happened in the London session. Then 9:30, nothing really happened in the New York session. And then all of a sudden, what? Boom, up, and then down, and then down. So you're operating inside of your daily range. This is the daily low, so I would have taken profits here. There's your open. There's your daily high. There's your daily low. You're only looking to operate inside of that. Okay? You're not looking to sell here and expect it to go lower, because what happens a lot of times is this. You take out the fresh daily or a new daily low. Let's see. Yeah, this was the open. So this is the end of the day right there. That's the end of the day. That's your last daily. That's the last candle inside of this day's range. But this would have been after a time that I would have been looking for entries. There's nothing happening in the New York session at all. Right? I mean, you got a little moves, but that's nothing. This is the type of expansion you're looking for. So, like, I have videos showing where I would have taken that entry based on daily resistance or something. A daily open, daily close, daily high, something. But it's always based on that. So I tell people that are new to this to use this SVP. This is your volume profile. It's the session volume profile. All right. Right there. Session volume profile. Shit, I just clicked another one. The reason I like people to use this is not for the red line. Forget about the red line. It shows you where the daily open is here. This is the daily open. So this candle, this is the low of day. This is the high of day. So you're only looking to trade inside of this box. You're not looking to trade outside of the box. Now, if you get in a short trade at the top of the box, and then it ends up breaking out and making a fresh low and continuing, well, guess what? You got lucky, right? You got lucky and you caught a nice trade and you got downside continuation. So that's why you take profit. So short sellers, any short sellers that shorted into this move up, they should be taking profits now because you're getting close to the midpoint of the daily range. I mean, it's almost to the exact midpoint. Let's see if it is or not. It is. It's the midpoint of the daily range. So you would have wanted to take profits there. Move your stop to break even, and now whatever happens, happens. You don't have to predict what's going to happen. You're situated. You've managed your risk. You've gotten it gone, and it's over with. And occasionally you'll get lucky, and you'll, like, say, buy support that's formed and get long. Like in here, put your stop down here somewhere. You get this push up and you take profits and you move your stop to break even. And then later on in the day, this happens where it comes back and stops you out. That's okay because you already made money in this move. So you're just trying to pick that perfect spot. Today we picked where the high. We were trying to get long at the high of the day. You don't want to do that ever. You never want to get long at the high of day. Ever. You want to try to get long at the low of day or at a previous day's close. So that would be this. That's daily support. Well, it's close. That's daily support. So if this is daily support, this is where you're looking for entries. Today, though, right? Not yesterday. Because yesterday's support didn't get formed until this candle right there. That close. That's what made this daily support. This close. So the next day, if you're looking for longs, you want to look for longs roughly right in that area. and then intraday resistance, because we're not going to have a daily resistance until we get to close, right? And the only way you get resistance on a daily candle is if it closes up on the day. So look to trade inside the daily range. Wait for those higher opportunities. 9, like you said, 6 to 10 in the morning is when you're looking for those trades. And you're only looking for your profit targets must be in line with the range that the market has given you. And if you do get this little breakout here, say you bought here and you held it, and then you got that. That's when you want to take profits, because you broke out of resistance. But within the same day, you have resistance over here too. Right there, that hourly candle. So you definitely would have been wanting to take profits moving into that, because the market has already showed you that at this price, there are sellers, because price moved away from it. Upon retesting it, the same sellers were still there. And they took profits on this move here. And we know that because we got this bounce. So that's kind of why I was looking for bullish opportunities. I just took it at the wrong place, right? Wrong place, wrong time. There was literally no trade to take today other than a short. Because at the top of the range, you're a seller, always. You're always a seller at the high, you're a buyer at the low. Every day, you're a seller at the high, you're a buyer at the low. Seller at the high, buyer at the low. No matter what. All right? No matter what. So it looks like Bitcoin wants to be, well, here's the open, so there's the low. Currently testing a midpoint. Would I buy this? No, there's literally nothing here. Yesterday there's a resistance level there, but that's yesterday. I don't know for sure that buyers will kick up right there again. Because here was when you broke out of it, right? So you're just looking to operate inside of this. You get into a position where you could make a couple percent, then you exit the position, and then you maybe look for 1 or 2 more trades that week. And then hopefully you can nail like 2 right ones and 1 wrong one, and you go into the end of the week profitable. And then you just look to repeat that process the very next week, because your money's going to grow. Because each time your P&L grows, your position sizes are going to grow along with it. As long as you're maintaining the same consistency, right? The same percent loss. Like, I'm only going to risk, if you're going to risk 2% per trade, that's a high risk percentage, in my opinion. Right? 50 trades, you're done. If you lose all 50, you're gone. It's over. Your money's gone. 1% gives you 100 trades. You're going to nail 1, right? So you only want to risk a little bit. If you get stopped, you're done for the day. You wait for tomorrow, because tomorrow's going to give you another opportunity. This day is going to close somewhere, and whether it's high or low, wherever that close is, then we'll make our trading decision then from what data we have, right? But we can never predict what price will do. That's why we look to operate inside of the range that the market has already given us. This way, we're not predicting anything. We know that there's a high probable chance that, price is going to zigzag back and forth in that range. Here, from 12 o'clock or 1 o'clock in the morning, you literally zigzagged in that tight range. So upon buying this, we should have sold there. All right. And then if you're looking to be a seller, you're looking to sell the highest closing hourly candle in the day. So you don't sell up here because you don't know it may continue. You sell down here. Or this is the perfect example of how you tested that resistance, failed, and closed lower. Forget about this candle here. Look at this candle, 9 o'clock on the open. Where did it go to? Right there. So that would have been the entry for the short. There or there. That's the only two places you could short. All right. But intraday, you never know what's going to happen. That's why you got to use stop losses. So you could either short here. This was that resistance. Short. Use the high of day as your stop. It's hard to do when the day's trending higher. So what I like to do is I like to look for positions in the like the overall trend, in the direction of that overall trend. That's what I typically like to do. So if you're moving lower for the last 3 days, you're probably going to be looking to sell resistance. It's just the way it is. If you're moving higher, you're looking to buy support. Just use the last 3 days. Look back. What's it doing? Are you red on the day? Red, red? Yeah, all right, look, I'm seller. Green, green. All right, be a buyer here. At support. Then it was that, right? So traps exist. That would be a trap. Just chop is what it is. So when you're in an environment like this, using daily opens and closes to look for intraday entries is the best way to do it. We lost today, but I can show you this platform here. On a 4-hour time frame. Right there. So this is my stop loss. I've already taken profits. That's why there's only like literally $150 left on the trade. Right? This was my realized P&L. Down. I sold into resistance. And that trade is still working. That's why I love, hopefully one day in America we'll get something like that. I took the entry on the tether side. So I lost a little bit of tether. It's settled in tether. So when you lose money on that platform, it's settled in whatever you're trading. But I like to trade the Bitcoin instead. So by trading Bitcoin, I make more Bitcoin or lose Bitcoin. And it's settled in Bitcoin. And then if you are a good enough trader and you grow your Bitcoin, the amount of Bitcoin you hold on exchange, you then pull it off. Put it in cold storage, leave a little bit on the platform, obviously, so you can continue to trade. You'll be back down to small position sizes, but as you go, your position sizes get bigger. And with leverage, you can do wonderful things. Wonderful things. So the ROE on that trade is 229%. I did not make 229%. I took profits on the first day because I looked for the short intraday. And why did I take that short? This is that short, by the way. This is the day right here. Why did I get short? Since price was moving higher. Well, this is 2-week resistance. So yeah, that's a breakout on the daily, but on the bigger side of things, you're still trading inside of that range. That's what the candlesticks give you. This is 2-week support. So on a longer term, you're only looking for sells up here or buys down there. If you buy down here and get the breakout, that's the preferred trade, obviously, not the sell. The buy at support, because in the long term, you've been sideways for a long time, but on the year, you're bullish. And it did look like we were going to see a breakout. Or on the line chart, you have broken out on the weekly once again, but it's all subjection, right? Subjection. Yeah, you broke out, but you're literally reversing. So I took the short there, just kind of expecting it to stay in the range. Shit. 2-week back to candles. So there's your range. This candle made it. So before that candle, this would have been the range we would have been looking to be a trader in. We would have been looking to be a buyer there and a seller there. And that's all we're doing, but intraday, right? So let that sink in, because that will really help you on your entries and your exits. The best entry for today's trade was obviously last night at 2-week support right there. But like I said, it had shenanigans. So if you can be patient and wait, I wasn't patient. To be honest with you, I should have known that you would probably get a run below that, or at least this, as that was the previous low. Boom, smoked low, up. You'd have been taking profits on that move there, because there's resistance. Resistance support. So you're just looking to operate in it. You're using the higher time frame level to get enteried, get long. And you're taking profits there, because that's the range. Anything extra is just icing on the cake. But nailing is difficult, right? Daily directional bias is difficult, especially when you're choppy. So stick to doing what I'm trying to teach you here, and you'll do better. Take one shot at it. Don't take more than one shot. One trade per day. If you win 2 trades, then you're done for the week, because you're probably going to close the week out up 10 or 15%, especially if you're trading crypto. So this is an options position that we were looking at 2 weeks ago, because this is the expiration and this is the strike. We bought 135 put. So we need price to get under this purple line. The reason I picked that strike is because it was in the range. So you had a gap up on bad earnings. A big gap up on bad earnings. So I sold an out of the money put. I bought an out of the money put when price was up here on this day. And I used the strike inside of this day's range. Now, I could have sold it here and made a little bit of money, but it would have been just a little bit better than break even, because of implied volatility. But what I was hoping for is that eventually you would break down in order to fill some of this gap. But we're getting closer to expiration, so those puts are losing more and more value. More and more value. I'm gonna pull this up real quick. And we'll show you that. But I'm holding it as long as this resistance holds. So on this day, you can see price traded up to what? Daily resistance and rejected. You could have taken a short at 139.63 intraday at that price based on daily support, objective price. You would have made money because you had a down close day. This is now support. So I do not want to see a close above 138.98, as that shows me that, it's making higher or lower highs, and then hopefully eventually we'll get that lower low before the thing expires worthless. So it may be a chalk on this one. This may not be that it's getting to the point now to where that 135. Sorry, that's the wrong ticker. So this is the strike. We paid $1.85 for it. So we almost needed to get 2 strikes in the money just to break even. And that would have to happen today. Right there's your daily price action. You trade it up on the open. Right there. Here's your open. There's the open. You traded up on the open to what price? 139. Where's daily resistance? Right there. So upon the open, price traded up to resistance. That's where you would have been a seller. And that's what it looks like intraday. There's the open, right? 2 candles. 1, 2, up, daily res, short, down. So we just need it to continue a few more dollars and get down into this region here. 133 would put you 2 strikes in the money. And as of right now, 2 strikes in the money is going for that. If it happens today, then implied volatility is going down. We bought this, it was at like 40%. Right? So we lost money on that, on the implied volatility going down, the Vega going down. That takes away money from the premium, as well as time decay, theta. That takes money away from the premium. That's why, it's so close to in the money, right? But still, we bought them for 185, so we're taking almost a 50% loss on that as of the way it sits right now. So a big drop today at 136.69. We need it below 134. And then that put will be worth money, and then we can sell it and we can get out of that damn trade. All right. Yeah. I want to see Bitcoin start squeezing too, my man, or my whatever. Sorry, I don't know. I don't even know how to pronounce your name. I feel so guilty about that. But yeah, I'd like to see Bitcoin start to do a squeeze to the upside. I would love to close that short down and open up fresh long at daily support, and see it go all the way up to 35K. That'd be fantastic. But unfortunately, it's not working out. Range bound for longer, probably. PetX says dump that shit. Probably wouldn't be a bad idea, to be honest with you. Yeah. So definitely ate a loss on that one today. Shorts printed, chilling now, but re-short on a bounce, 1850 ETH. ETH is still up on the day, so be careful. You're up 1%. Bitcoin is just barely up. But as long as you're taking money on your short entries, you said 850. Wait a minute. Oh, so you think it's going to go to 850? I mean, technically you're inside of the daily range, but I mean, you're expecting the whole complete entire day to be retraced. You know that, right? You're looking for like a complete and total retracement. And you're bullish on the day. So, I mean, it could happen, but learn how to take profits because you'll do much better, in my opinion. Taking a short up here is not a bad idea as long as you take profits there or anywhere, as long as, you get away from your entry. You take profits on the move lower. While price is moving lower, you take profits. Then you can set your stop to break even, and then you still have a piece on the trade, but you have zero risk on the trade. All of your risk is out of the market, and on top of that, you sweetened your P&L by a couple percent. So now whatever's left on as unrealized P&L is fine. And if you do get downside continuation, that unrealized P&L could eventually pay you more than the initial trade itself did, right? And that's smart thinking. That's the way you should approach the market. You look for the highest probable trade at the highest probable time, and you are quick to get your risk out of the market. Whatever you're risking, the amount of money that you're risking when you place an order, an entry, you want to move into profit, take profits. I do 70%, and I leave 30% of the position on. And like I said, occasionally when I get on the right side of the trade and I get a breakout or continuation for several days, such as the CAD Swiss trade. I mean, this thing's been trading up for days. I just took profit on it today. So I got long down in here. And for 5 days it's been going up. Right? So, yeah. But I don't ever expect that. It's about probabilities. You look for the higher probable entries, the higher probable exits, and then over time, you'll start to learn more and more about, the way daily ranges work and stuff like that. And then you'll get better at your order placement. You'll get better at timing the entries. Like I said, if I hadn't been live on YouTube today, I would not have taken that bullish entry because it is at the top of the daily range. You don't want to look for bullish entries at the top of the daily freaking range. Because a lot of times this is what happens. So you don't want to get long. I mean, I understand getting long at support here if you think you're going to get upside continuation. But look for that to happen at support. Lower, like daily supports. Intraday support, not so good. All right. Range bound for longer, probably. All right. So great to see you still sharing your insights with everyone. I've been following you since the early conquering trading investing days. You are the GOAT. Thank you, the boss. I appreciate that. I really do. I'm just trying to help people. That's it. Just trying to help people. You guys have a fantastic rest of your day. Make sure you guys trade smart. Make sure you trade. Wait, I screwed up my own exit. Have a fantastic day, guys. Happy trading, everybody. We'll see you Tuesday morning.